Welcome everybody to 15 Minutes of Finance. It's Friday. We got to cover this last week in news. Okay, so a lot has happened this week. We had rate cut news. We had earnings reports. We had Palantir over 200, Nvidia over 200. We had a lot happening. Let's jump right into it. So stocks finished higher Friday as Amazon's strong quarterly results boosted the NASDAQ, with major indexes ending the week and month with solid gains. The tech-heavy NASDAQ benchmark, S&P 500, and blue-chip Dow Jones Industrial Average closed up respectively 0.6, 0.3, and 0.1% to conclude the week. Yesterday, the NASDAQ, S&P 500, and Dow all ended lower as shares of Meta Platforms sank 11% and Microsoft fell 3% following earnings reports after markets closed Wednesday. However, strong results from fellow Magnificent Seven member Amazon after the bell Thursday lifted stock indexes Friday. Amazon shares ended up 9.6%, setting an all-time high. Shares of Apple, the world's second most valuable company behind AI chipmaker Nvidia, with a market capitalization of above $4 trillion, finished down 0.4% after the iPhone maker also posted robust results late Thursday. Shares of Nvidia fell back below a $5 trillion market valuation following yesterday's 2% decline, finished down 2.2% following news that it is partnering with Samsung and other Korean firms to deploy 250,000 of its chips across the Asian country. Meta and Microsoft shares fell 2.7% and 1.5% respectively. Reddit stock popped 7.6% after better than expected results, while Netflix shares rose 2.7% after the biggest streaming company announced a 10-for-1 stock split. Stock splits, almost always good. We like to see that. There's a couple moments where they're not good, but for the most part, they're good. Among notable stock-making moves after quarterly results, energy giants Chevron, ExxonMobil shares were up 2.7% and down 0.3% respectively. Cryptocurrency treasury firm Strategy, MSTR, and crypto exchange Coinbase Global, Coin, were up a respective 5.9% and 4.7% each. Cybersecurity company Cloudflare Net, ticker NET, surged 14%, and data storage firm Western Digital gained 9%. Rubbermaid parent Newell Brands, ticker NWL, plummeted 28%. The 10-year Treasury yield was a tick below 4.1% at 4 p.m. Eastern Time, little change from yesterday's close, while the U.S. dollar index, which tracks the value of the greenback against a basket of foreign currencies, advanced 0.3% to 99.78. Bitcoin was trading near 110,000, well above yesterday's low of 106,350, and gold futures were down slightly to $4,010 an ounce, while West Texas Intermediate crude oil futures rose 0.5% to 60.85. Okay, that is the quickest I think we have ever done news. Guys, we had a big week. What we had? SoFi's earnings. We had United Health's earnings. I mean, Nvidia did, I can't remember what the conference is called, but they basically did a giant, massive presentation where they announced all these partnerships. And our stock to watch, which is Lumen. If you guys haven't noted or seen that yet, it's our newest short. Go ahead and take a look. We do that at least once a month where we provide you guys, the retail investor, information on what we're looking at, what we like to add to our stocks to watch list. And we add at least one position a month that we like to watch. Because, we do this for a living. We invest other people's money. And so we're trying to give you guys a look behind the curtain to see what it is and how we do. What's our investment philosophy, right? How are we designing these portfolios? What makes a company interesting to look at? What makes it not interesting to look at? And I think Lumen is a very interesting position, especially if you've got a long time horizon and you're willing to be a little bit more aggressive since the company doesn't have any positive earnings yet. However, revenue keeps ticking up. Their partnerships are growing. Palantir, I mean, come on. The reason Palantir exists is because the companies that use them, they make their margins increase by a fat percentage, a massive amount. They become extremely efficient when they partner with Palantir. And a company like Lumen, which they're effectively, they help companies take data information and then they put it into other areas or transfer it to other companies, right? So with AI, they're going to be able to take AI data and transfer it quickly, instantaneously, efficiently to where it needs to go, whether that's large language models, to the end user, to other businesses, to other departments in the company. They are effectively the roads and the railroads and and the waterways, and they're building the infrastructure of travel for data. And it's an extremely boring concept. We like boring. So does Peter Lynch. So does some of the best investors in the world. When things are boring, they tend to go a lot less. Their ride, meaning investing in them, is a lot less bumpy because it's all about performance. It's all about data. There are no fancy headlines. There are no analysts at Goldman Sachs or whatever investment bank you have or that you like. Pick one randomly, Morgan Stanley, any of them. There's no magic in writing a negative headline about them or a positive headline. They just get to exist. All right, and they get to be a little bit more of a pure investment play than investing in like Tesla, for example, which headline heavy, driven by market sentiment. This is much more of a fundamentals drive the story kind of conversation and kind of company, which is why we like it. So ServiceNow is another company we really like, and I wanted to bring this up. They're doing their very first stock split. A company, so what company said they were doing a stock split? Was it, I literally just saw it. I'm so sorry, guys. Bear with me. Netflix? I don't know why I can't find it. Netflix. Yep, Netflix, 10 for 1. So when a company doesn't stock split, like ServiceNow, because they're going to be their first one, it's considered a prestigious play. Like, you have to be able to afford one share of ServiceNow. You needed to have $1,200 earlier this year. $1,200. That's a lot of money for one stock. That's a lot. So that's like a prestigious play. Like, so if you look at Berkshire Hathaway, let's look at how much it is. That's a publicly traded company, right? So they have a share price. Berkshire.ba, which is just a different kind of share class. It's $32,680 for one share. Now you can buy like Berkshire A. Berkshire A is $715,000. So hold on, let me do Berkshire B. 477 spot 54. So that's a much more reasonable price. So when companies don't stock split, it's basically saying like, we think we're trending up, and you need to have real money to be able to invest in this company. Like, we're not playing around. This isn't for everybody. It's just like getting into the club. You know, that's a cheesy example, but it's true. Like, if you're a really pretty girl, you get to cut in the line. That's kind of what this philosophy is. Like, unless you bring value, like what do we care? We don't care that you can afford our share. Like, get to the back of the line kind of thing. So I don't know why that reference popped into my head, but it did. And I think that the stock splitting is very, very important because it signals a couple of things. And off the top of my head, the biggest one is that the company wants everybody to be able to invest in it. Like, they believe that their share price is going to continue to rise. And so they need to do this stock split now so that other retail investors, mostly retail, because the share price has to be cheap for most retail investors, so that they can participate. Because they believe their company is so good that they're willing to flood. Well, it's not really flooding, but they're multiplying the amount of shares available. Now, the market cap stays the same, right? Because if I have 10 shares and they're $10 each, and now I go 10 for 1, I'm going to have $100 worth of the share, but now I'm going to have 100 shares. Does that make sense? Hopefully that makes sense. The share amount increases, but the value does not. Now, what that does is, like I said, that allows retail investors to flood into the position, which will drive the value up. So there tends to be, when a stock split is announced, tends to be good for the stock. Once it splits, tends to be good for the stock. And then people take their profits, they leave, it drops back down, and then it's all back to fundamentals all over again. So that's something to be considered with these stock splits. I love it, big fan. Netflix it's funny to me that they're stock splitting after all of the bad talk, all bad press they're getting in the last couple of months from Elon Musk. But, you know, so much of this is press driven. So much of this is headline and what is the biggest article out there today? Who's the biggest name talking about ABC company? It's all just a way for you, for me, for our clients to take advantage of other people's quick, rash, irrational decisions. Okay, every single bad headline about Tesla in the last 10 years, nobody's had to own up for being wrong about them. But if you would have just held the stock and said, look, I think the company's a great company. I think what they're doing is innovative. It's trailblazing. We like it. Elon's a little crazy, but boy, is he one of the brightest minds ever. And definitely of this century and definitely of this generation. You wouldn't have had to have worried about any of those headlines because you would have just said, I believe in the company and I believe in the person leading it. Okay? Those kind of things is why people who buy the S&P 500 do extremely well because they're just not worried about anything. It's the 500 largest companies. It's the 500 largest companies. It makes up more than 45% of the globe's economy. Okay, why would, think about that, 45%. How could even a 20% market crash in that not rebound? And legally, I'm supposed to say this is not investment advice, but logically, use your brain. Okay, even if someone from the SEC was telling me, oh, you're breaking our marketing rule, you're like, how could you say that? I would ask them the same thing. Use your brain. It is 45% of the world's economy. If that actually goes to zero, if that actually breaks how all these doomsdayers talk about, you are going to be worried about water. You're going to be worried about ammo, gunpowder. You're going to be worried about shelter, not about whether your $100,000 401k in the S&P 500 dropped 20%. This is the exact same reason why in 2008, if you just didn't sell, if you just did nothing and you kept working, now you would have an exponentially more amount of money. But people liquidated their 401ks and held it in their mattress and they lost. But there doesn't have to be losers and winners in this game. There is because people just naturally make good decisions, but there doesn't have to be winners and losers. Everybody can win. The only thing is that not everybody can win at the same time. That's the one thing. But everybody absolutely can win. We're a big believer of it. I just burped, had an internal burp. It's disgusting. You're lucky I didn't share that with you because I just suffered quite a bit. I'm ranting, but I get this. What's more important is that you pick, and Warren Buffett pictures this or points this out beautifully. If you had a punch card with like 20 options on it, and that's all you could ever invest in is 20 things, you'd probably be a pretty good investor because you would make sure that what you're investing in, you know about, that you believe in. That's not what happens with these people. I mean, you know it. Be honest with yourself. How many times have you made an investment on a whim and then things didn't go well and you took money out? And then 6 days later, 6 weeks, 6 months, 6 years, you're like, oh man, I should have just left it in there because look how great it's done. But in the moment, you suffer. You suffer from immediate gratification and loss aversion or risk aversion technically. But it's the human nature. And that's why having a professional help you is valuable, or it's valuable for you to be super involved. Either one is okay. Okay, but if you do anything in the middle or you get scared, that's just you're losing and you don't have to lose. Okay, that's just the case. You could absolutely, not to point at you, sorry. Every time you point at someone, there's 3 fingers pointing back. You do not have, or you absolutely can do this yourself. And I'll end on that, but you can do it. Okay, I believe in you. Guys, that's it. Send this to someone you know. If you've stayed this long, then you must like something. Please, we're trying to grow. We went from audio only to now on YouTube. We're trying to grow as big as we possibly can. I want to be the next Jim Cramer. We want to be Dave Ramsey. We're doing our best. Consider a like, a share, a subscribe, whatever all the kids say these days. And as always, invest early, invest often. We'll see you next time.